Let's talk about the markets overall. Because in thinking about sort of the kind of conversation that I thought we would have and one that I wanted to have, I'm trying to understand more fully why you've continued to lean so heavily against what has undoubtedly been, and to some obviously been, a bull market, right? Which is at the 2-year anniversary of that. But I can go back through so many of our conversations, or conversations you've had with others on our network, whether it's in April. S&P 500 will prove to be a bad investment with poor 2 to 3 year returns. We're up 23% year to date. July, equities are capped. August, equities will be in a downtrend. September, downside risk for equities here are very high. Like, what has led you to be so consistently negative and not be able to bring yourself around to the fact that we're in a bull market, whether you like it or not?
So I think right now the backdrop is, the consensus is central banks are cutting, the economy is strong, earnings growth next year is going to be 14%. What a great environment, I get that. Why have we been cautious? And we've made a lot of calls to our clients this year, bullish and negative, bullish and bearish on both single stock sectors and the overall market.
No, I know,
but we clearly have been overall cautious on the market, negative on the broad market for sure. Why? The market right now is trading at 24 times this year's earnings and 22 times forward earnings, and has the highest capitalization GDP ratio ever. Now, you could argue that things were expensive 6 months ago, right? You have to realize that in the we've only seen these multiples one other time, and that was during the dot-com bubble. Those that were buying in 98 and 99, right, look like heroes for a year, 2 years. They ultimately saw very poor returns over the course of the next 3, 4, 5 years. And so when you're buying multiples that are the second highest in the last 150 years, that is a very risky proposition, especially when you're at full employment. And so, yes, things can last longer. Did I expect the multiple on the S&P to go to 22 times? No. And I would say most people who modeled things out a year ago, a year and a half ago, did they think it was going to go to 22 times earnings? No.
Well, because you thought the economy was going to roll over, and it hasn't. Let's be
clear.
Correct.
Absolutely. The economy
nor have earnings.
Yes. The economy's been incredibly resilient. We've had $2 trillion fiscal deficit, which has been big fuel. We've had an AI investment boom, which has been big fuel, and that has offset the Fed going from 0% to 5.5% and doing QT.
Did you just not think that was going to happen, that those other forces would be as powerful as they've proven to be?
Yeah, and so one of the reasons why we have not been aggressively negative this year is because, yes, we realized the deficit was going to continue at $2 trillion, and by the way, probably growing.
But I mean, I read you've been aggressively negative. What do you mean? You've been aggressively negative. You said in April that S&P was going to be a bad investment. In July, that equities are capped. That in August, they're in a downtrend. And then in September, downside risk is very high.
Yes, so a bad investment, I think, as I said in the notes this morning, I think over time, in the medium term, and I still believe this, equities are going to prove a poor investment, because you mentioned the torts and slope from this morning. Ultimately, if you look over the long term, when you buy multiples at this level, you may win for a year, right? In 97, 98, you won for 2.5 years, and then it ultimately proved to be a bad investment. And I think that that's going to be the case, again, especially when we're already at full employment. And again, we have that leaves less room for sort of that move up. But between now and year end, as an example, I think the economy is going to hold in. And so I think stocks are going to be, overall stocks, when you find, I think the Russell 2000 is going to rally.
I'll leave it there.
Yeah.
I appreciate you coming back and having this conversation.
Absolutely.
I'm trying to square up some things
sure.
That we've discussed over the last year, 18